Welcome back to Finweek Money Matters. Now, in this new segment of the show called Insight, we give some understanding salient business issues, and this week, anti-money laundering is in focus. This has developed significantly over the past 20 years, and recent regulatory scrutiny has seen unprecedented fines being handed down. As a result, AML, as it's referred to, has become a key issue for senior management and banking institutions, both locally and internationally. For more on this, we look at KPMG's Africa Anti-Money Laundering Survey 2012, and we're joined by Kevin West, KPMG Partner for Anti-Money Laundering, and Manet, Basson, KPMG Associate Director for Anti-Money Laundering. Thanks so much for joining us today.
Thanks.
So I suppose this is quite a relevant topic given what HSBC is doing when it comes to downsizing their operations in North Africa. Tell us about what HSBC's decision means right now in light of the developments when it comes to a crackdown on anti-money laundering.
I think if we look at HSBC's decision, it's a clear indication of the impact that non-compliance with specific regulations in anti-money laundering and sanctions-related fields can have on a business. That impact is as vast as the closure of businesses, the downsizing of businesses, which in its turn can have a massive impact on reputational issues as well.
Could they have avoided it? I mean, is that what banks are trying to do, Manet?
I think they're more, in fact, trying to be preventive now. With regards to this HSBC one, specifically, it was someone found guilty of money laundering within the bank. And they decided, you know what, we had a look at our risk. We decided that we cannot now take the chance anymore. We are now ready to say, we look at revenue. But even though the cost of non-compliance is so big, the cost of having this reputational, as Kevin mentioned, with regards to having someone being found guilty of money laundering, it's just too big.
I'm being cynical here again, but you know, are the banks actually cracking down on it? I mean, we seem to be seeing scandal after scandal after scandal, and you know, yes, there's been a lot of anti-terrorism legislation, money laundering, and there's different issues that are coming through, and it's almost, to the outsider, it gives the impression that they're just sticking up their hand and saying, okay, oops, we were guilty, we won't do it again.
And you're probably right in the perception that is out there, but we know, specifically from the work that we're doing, the amount of money and investment that the financial institutions are making into anti-money laundering on the one side, and secondly, it's the increase in the supervision and regulation on the other side. So, anti-money laundering, counter-terrorist financing is an evolving issue. It's a moving target, and each year it's becoming more and more onerous, and the banks have to play catch-up.
Is the issue that the institutions are too big to be able to genuinely supervise? Because I get the sense that almost regulators are too scared to actually crack down too hard because they might actually be scared of what they find. And maybe, again, this is an outsider's perspective, not having insight into it, but the perception seems to be that every time you lift up the rock, they might find something they don't want to find. So it's a reactive situation. It doesn't seem to be a preemptive situation. And do you think that's a fair comment, or do you think that it has genuinely changed over the last couple of years?
I think it has changed. I think we see, and our survey certainly also does show that, is the increase of the involvement of senior management in respect of setting the tone in respect of anti-money laundering. It is driven, specifically our experience in South Africa, it is driven very hard by senior management. They take it seriously, and I think our supervisory institutions are starting to take the matter seriously as well.
Yeah.
Specifically with regards to the updated guidance note 3A that was issued by the FIC. For the first time, it says in a clear paragraph that your KYC, your anti-money laundering, terrorist financing control policies will be approved by board level. And it's not just, and as Kevin said, the tone of the top is very important, but don't forget how important it is to bring the mindset of compliance, not only at board level, because they could be very passionate about fighting money laundering, but if the guy at the branch sitting right when the customer walks in doesn't take that seriously, you're fighting a losing battle.
So how then do you build that into compliance at the bottom? I mean, what type of measures are businesses building into their procedures, basically?
Yeah, training. I cannot emphasize, and this survey also showed how important is training at your front line, because you've got a high turnover in branches, financial institution branches, where people they start and within 3 months they leave. Your adequate training, refresher training, telling people what to be aware of, how to, a suspicious transaction, how to identify one, what do you constitute as suspicious, that kind of thing.
Yeah, and I think in support of that is the investment in technology. The technology side of anti-money laundering is developing at a rapid pace, and the cost of that investment is also not very cheap. It is very expensive, and the financial institutions are investing in technology. With the size of banks, you cannot do this on a manual basis. You need to invest in technology.
On the flip side of that, how is technology and the use of the web and analytics making it more difficult to tackle these problems? How is it complicating and making it more easy for, say, the terrorists and the politically exposed people to manipulate systems? I mean, there's a flip side to it, right?
Yeah, there is always a flip side, and money laundering, just as it is on the fraud side, the idea is to frustrate the criminals, not to use the financial system, because if your financial system does become a bit porous, it has an effect on the entire economy. So there is a flip side. Your criminals are getting more sophisticated in the methods and topologies that they use, and the banks are also, in their turn, trying their hardest to keep up with that. So it is a constantly evolving issue.
Yeah, but think about it. 20 years ago, you walked into a branch and you opened an account. So you had face-to-face contact with the branch manager, which you had at that stage. Now, today, you can go to the internet 12 o'clock at night, and within 5 minutes, you've opened an account. They don't know who you are. They're waiting for the documents to come and verify that the individual who opened the account is in fact you. But we're making it easier. But as Kevin said, the money the banks are spending now in order to understand the website, the technology side better, is in fact increasing. And they, as the criminals are getting smarter, the banks are getting smarter.
Okay, then flippant question, but where's the drug money? So let's say who's bad at it at the moment, who's looking at it, who's not got the controls in place, what regions, what geographies are still porous in terms of being used and targeted by criminals. I mean, maybe that would be an interesting exercise to look at, because I think, we look at South Africa and we actually realize we do actually have very good compliance, we do have very good executives.
Yep.
I think that we can be a little bit, I think we're often quite negative, but that's one of the things that we do very well. Who's doing it badly?
Yeah, I think badly is I'd probably rather term is where do we see the improvement that is required to take place, the opportunity. Naturally, I think West Africa, most certainly. I think it's still very much in its infancy in terms of money laundering control, and the same for East Africa. If we look at the financial hubs through our continent, it is basically the West and East Africa.
Who is going to drive that? Does it predominantly come from the regulators?
It's a combination. It comes from, first of all, from the political will, from government, firstly. Secondly, I think the willingness of regulators to regulate and aggressively regulate. And thirdly, where I think currently in those areas where improvement is required, we do see a lot of peer pressure, and that peer pressure from other international financial institutions.
Does it hamper, and I mean, I don't know if research shows this, but would it hamper a business's growth? For example, I mean, if you're just talking about West Africa, there are many banks there. It's gone through a banking crisis, consolidation as well, and entering the next phase as, for example, Nigeria grows, So will it hamper those businesses' abilities to grow across the continent, perhaps even internationally, if they aren't focusing predominantly on anti-money laundering?
Yeah, I think that, first of all, anti-money laundering needs to be part of the entire business strategy. If there's an aggressive growth strategy, new products that are coming to the fore, you need to assess the related risks in terms of growth and new products, and your anti-money laundering mindset needs to be part of that. So I wouldn't say it inhibits growth. You just need to understand the risks when you embark on a growth strategy, and your anti-money laundering strategy needs to be part of that as well.
But it's also important if you talk about West Africa, that when the regulator comes in and he applies the standard, which is a locally international standard like FATF, that all the banks, not just those foreign owned, but local banks as well, apply the same standard. Because if you're going to make people uncompetitive, they're not going to do it.
Sure.
Because I don't want to lose the client. He walks into another branch and he actually opens an account.
Yeah.
You have to make it equally for the whole country.
And is that not what's happening at the moment in East and West Africa specifically?
Correct.
Yep.
It's an area where we believe regulation should be more aggressive, and the playing field's level, because you've got local banks versus international banks. International are under far more pressure than the local banks that aren't aggressively regulated.
I mean, I think that's kind of the question that I find fascinating. Is you look at the US banks, the European banks, they've all got, they've had their own crises, and yes, the matters are slightly different, but it all comes down to supervision, and the banks were able to cowboy their way through the credit crisis. South African or African banks take a lot of criticism for not being, for being perceived as being less well regulated. How wide is the divide between first world and what I guess you roughly term third world banks in terms of regulation, and how quickly is that gap closing?
Yeah, I think the gap is closing quickly. We do see a lot of regulation taking place throughout our continent, and it does take time. These things cannot, unfortunately, and do not happen overnight. So we do see a catch-up, and it's because many of the local banks are wanting to play an international role. And if they want to play an international role, they have to be internationally compliant. So we do see a move, whether it's as quick as we would like it, probably not. But these things should also not just be forced through, because that can create its own set of problems. But we do definitely see a move towards a far better regulation and regulatory compliance.
Who's impressed you the most then? I mean, who has made the most progress that you could genuinely pick out and say this is a country that has managed to really jack up their system?
Well, I think from the African continent, most certainly South African. I think South Africa does play its roles with its neighbouring countries, because it doesn't help for our continent just for South Africa to be strong on the regulatory side. It needs to be throughout the continent. So I do see South Africa as one of the leaders. And I think as well, if we look at West Africa, specifically Nigeria, we got Ghana coming on board. They are really starting to get their act in place.
So even though it's kind of coming off a low base, if you could call it that, where they have been quite far behind, the crackdown is taking place now.
Correct.
It's interesting you mentioned that.
And I think if you term it like the crackdown, yes, I'm sure we're going to see a far more development in that area, both in West and East Africa, in the next 1 to 2 years. I believe that's so.
Well, just the last question. I mean, one of the key focus areas has been specifically as a result of terrorist activities, politically exposed persons and how to identify them. I mean, is this becoming more niche area that banks are focusing on the African continent, given, of course, the fact that we know there are certain classified terrorist groups across the continent?
I think South Africa, in fact, has been ahead of the game in terms of PEPs, politically exposed persons, because we've been looking at PEPs, domestic and foreign PEPs, where the international world, only recently with FATF's new revised standards, are now looking at domestic PEPs as well. And if you look at PEPs, it's not that you don't want to do business with it. You want to do business with PEPs, but you just want to keep the risk and the controls in place to make sure that the account is not abused for political gain.
Okay, there's the question of Gaddafi money in South Africa, and look, it's not traditional money laundering, I suppose, but you found it in South Africa. It's now suddenly perceived as being a haven for what is now classified as a politically exposed person. What do countries do in that instance?
I think in terms of that, the first aspect is, first of all, the identification of what funds or assets are held here, and could they deem to be illicit assets? Were they assets that were illicitly obtained and put here? The fact that a politically exposed person has an offshore account in itself is not a crime.
No.
However, it has to match back to the profile of that politically exposed person, and the source of funds that a political person uses. Where does that originate from? And that's a part of it. And then the second part of that is, if it is deemed to be illicit, the necessary reports are made, and then from a legal perspective, actions in terms of recovery would be put in place.